Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So today, post Jackson Hole, no one knew exactly what to expect except for on Friday. You had a big wide range doji, giving us 2 points of reference, Friday's low and Friday's high. Within that doji, you also had some constructive aspects of that trade. You had all of high beta tech pretty solid while the market was getting hit. You also had some of those new issues that we've been tracking go from red to green and hold up. So give you some signals not to be all in short, but maybe being some longs with the hedge, which is what I basically did, besides some of my options that I've had on for multiple weeks. So if you saw in the VTF, I was long Facebook, BABA, Netflix, short spiders, and then was going to figure it out. So in the note, I came out and I said I'm going to look at LN because the Nikkei is up. I'm going to see if Facebook can continue to go over its pivot and whether or not Amazon gets a day two, if Google could finally wake up, etc. All these if-then situations, and also if the spiders trade above this resistance, I'm just going to cover and revisit and maybe short the close as a hedge in case I have multiple positions. So anyway, you look at the chart of the spiders and you'll see, again, here is your your V bottom after the post-Brexit. This is when we broke out. Okay, it's been very choppy thereafter. Listen, some people are saying to me, hey, you said, if we break the 8-day, get out of the way, okay, or reduce risk. Okay, yeah. If we break the 8-day and hover around it, you reduce a little risk, because if you did, reduce it when just say the 8-day here was close to 218.50, you weren't, jumping out of your skin on Friday when we were down to 216.25, and then you might have even been able to rebuy back as it reclaimed this, or not, or got out of the way and then rebought some stocks as you had this doji bar. So now after today, you had an inside day, still constructive, lots of choppiness. The indices are not the place to be. The place to be has been individual names. So let's start with high beta tech that actually showed some strength on Friday while the Dow was down 50 points. First one that I best was Facebook. Facebook finally woke up. Here they sold it after earnings. Then it held the 21-day this entire time. On Friday, it actually traded above a prior high and closed well while the market was well off. Look at if you go back just to see what's relative strength. Look at this day how Facebook closed on the highs. Okay, where as the spiders closed smack in the middle of the range. So what does that show you? A little relative strength, which gave you a reason. On Friday I tweeted, I said, make sure you have a reason to be long something, as there could be more volatility. So anyway, Facebook wound up giving, a nice breakout trade above this key area. I am still in small, but less, because I sold some strength. My day one, day two, day three rule, less than I had coming in today. Now, Netflix was a different story, was downgraded. Still fine. It's still this is also one that didn't have great earnings, so it's a laggard place. You have to be a bit more careful. Basically, it's trying to be relevant. It's trying to go. There's a lot of upgrades, downgrades, etc. around it. So I came in long it, and thank goodness it held above the prior day's low. Okay, and you could have bought more. Mark Mahaney came out, was positive, went up a little bit. You could have sold a little bit into it and basically been somewhat saved. What do I mean by that? You go to the 5-minute chart. So here, it opened lower. Okay, so if you said, okay, I'm going to give it to, I think on my note I said 95.80, didn't come close near stopping out there. Here was your lower range, and then once on TV you heard that he was going to be on, I knew that he was bullish on Netflix, so I bought more, and then sold some, and then it just friggin' meandered into the close. So I have less on than I had last night, but I'm still in it just in case. It's been choppy, but again, harder to trust as it's below all the moving averages, but it had a nice setup. That's why I was in it. So I had a reason. Okay, BABA, great earnings, great scenario as far as, from when it broke out above this 81 and then broke out pre-earnings above here. And I had it looked as if it was very strong coming into, into after Friday, right? After Friday was like this, so it closed on the highs. I was thinking maybe, it breaks this descending channel where you get a good add. It didn't show relative strength today, but closed in line. So I'm still in it. I still think that at some point it gets above this descending channel and goes again. I actually bought some October 98 calls just to sit, just in case I keep getting chopped up. I am long some, and maybe there's some kind of catalyst to add. So, BABA, decent. So out of the three, you could have traded out of Netflix. You could have, stayed in BABA and nothing, a non-event, and Facebook could have paid you. So, from then the open, Nikkei was up. I'm like, let's revisit LN. LN was something that, kind of lost a little momentum, but maybe you can get back in play. So here you go. LN woke up a little bit, held the 21-day moving average, into another pivot. Not saying it's going to get back to highs anytime soon. It might, but I'm back in. And if you look at the 5-minute chart, the way I did it is I bought it versus the gap. How do you do that, Red Dog? Well, let me show you how. Okay, here was, the first move I bought a little bit, and then on this I bought a little bit more, and then it just trended all day. So, gapped up, held, and held the 8th day, and I was actually I was actually waiting for Fox Business when this happened, but my stop on some of it was below this, so it never violated what I thought it had to hold in order for me to stay constructive on it with with tier 1. So anyway, closed okay. You go back to some of the new issues while I'm talking about them. Let's go back real quickly. What did I say? Real quickly? Yes, let's go there. ACIA, okay, gave you a nice buy the dip on Friday. I think guys in the chat room did real well. Deep, Prince was all over it too. And then you had another day. Now I think it's a little bit harder. Okay, this was calculated to buy this first that low, and now you had your day 2. TWLO wasn't as strong, but at least it gave you that red dog reversal here. Okay, and then gave you some strength to sell, and at this point needs some time. Maybe tomorrow, if it opens up flat, you buy some more, but overall, this was your red dog reversal. You were able to get a day and a half play, and now see what's next. And then we go to high beta tech. On Friday, Amazon woke up for the first time, came out with good numbers. High beta tech said at some point it'll wake up. It woke up. Today it was up $3, $4, gave you a little follow through. Wasn't ready, to make new highs yet, but what does Red Dog mean by wake up? Well, it woke up. Let me show you. Okay, right here. This is the top end of the range. What did Amazon do when the spiders gave you a doji and the tech gave you a doji? It closed on highs. So if you were looking for a reason to buy it after this descending channel, Red Dog reversal right here, higher low right there, and then there was your breakout, and then just wasn't enough to get a full move above the highs. But either way, great day and a half trade if you're in it. I wasn't actually in it. Anyway, I was away and just didn't feel like dealing with it. Today, though, I did nibble a little bit on Google. Why did I do that? Because it also had great earnings, and I just think it's a matter of time before it wakes up. Here is your earnings gap that it held. Here is your descending channel. I'm kind of cheating a little bit because I'm buying it before it kind of breaks above this. But, I'll do a small amount, and if it happens to get above 801 on heavy volume, I'll add more. If it doesn't get below and fails, you know what, I cheated a little bit. I deserve to get hit, but I do think, again, just the move from here to the earnings move got digested, and if the market wants to hang out and stay strong, I think it goes. But we shall see. With WYNN, remember that, but it's a different animal. I tried cheating here, okay? I was thinking that WYNN was going to break above this channel here, but this was a laggard play. This didn't have good earnings, and I was just trying to play it for a setup, and then when this happened, boom, I got out of the stock because it wasn't ready to break out yet. And then right here, I got out of the options because this ascending channel broke to the downside. It wasn't ready, and cost me a little bit of money. But you know what? Didn't get overly stubborn here. Now some people are trading a red dog reversal right at the 200-day. But overall, if you cheat a little bit, it could hurt. So I'm not saying that's going to happen to Google, but I'm just saying, cheating a little bit. I never really cheated on anything in high school or college, but here I'm cheating a little bit. Oh, that's a nice little, you look at that setup like this, that looks pretty good, right? Overall channel. And then, gapped up after earnings and kind of flagging now, and maybe it gets going again. You could probably buy it at 801, and then you might even be able to buy it at some point if it takes out this 810. But it hasn't happened yet, so you're anticipating. Gold and the miners, I still think, are somewhat broken out of play. The TLTs, wow, they've friggin' trapped a lot of bears. Okay, what do I mean by trapping? Okay, first of all, look what the last time this thing coiled and had so many stop and go before breaking out. Well, here, okay, if you go like this and get out of yes and get out of this, you would think that, that's why I had the puts on, that it was going to break to the downside, right? Look at that engulfing bar below all the moving averages. A lot of people probably went out short, and that was what the good book would say to do, but it is bonds, and the whole, a lot of people out there, the worldwide trade them. So I went out with some puts, and then kind of people got trapped here. So if you went out short, if I were you, I would have covered. I actually got out of my puts just to salvage, whatever it was. I didn't need a zero just in case it continues to go. I had them on the weeklies. I'm not such a high conviction play that they were going to fall apart. I just thought this bar was worth having some puts on. And now we'll see if this trap gives you higher prices. So anyway, that was kind of dirty. And then lastly, the GLD, what'd you do? Still, kind of hanging on the lower end of that range, still below all the moving averages, but gold likes to trap a lot of people also. It's still, I think more bearish than bullish, but the overall trend, from the start of 2016 is still intact. So if you trade the trend versus actively, you still don't have much to worry about, as you made a lot of money, because chances are you probably were a buyer around here. Okay, now we'll see whether or not, it comes in and corrects a little bit more. Some people think that the DXJ is ready to roll, ready to go and roll me to the upside. A nice inverse head and shoulders pattern where the 200-day could be next. I'm not so sure. Just if that happens, it'll probably be a bit of a tailwind. So some guys are, the trade currencies think the yen's going lower. I don't particularly know. I'm just pointing it out because, we look at this overseas, and the morning you wake up and the Nikkei's up another 1% or 1.5%, chances are that provides a little bit of a tailwind versus a headwind. So all in all, Jackson Hole behind us. Just big jobs report on Friday. Some banks acted okay today. Tech acted well. Oil didn't fall apart, and now we'll see what's next. I think every single month they've warned every reason why you should not be in the market. In May, sell in May and go away. Then earnings season, watch out. And then a week before August, the anniversary of the plunge. And now they're talking about how September could be a September to remember to the downside. So don't listen to the TV, listen to the prices. If you sold when we broke the 8-day, you know what? One of these days it'll break the 21-day and keep going, and you won't feel bad about having to rebuy and reposition when the market proves and gives you another pivot like it did last week. Gave us 2,000 or 2160 to trade against, and now we'll see whether or not that was it. If not, we'll know. But keep trading against levels, keep looking at the price action, keep those feet moving, and we'll see what happens next between now and Labor Day. And if you're away, go to the beach and stop checking my videos and do a little surf diving or whatever, ride the surf. Anyway, goodbye.